Hello, my fellow wealth hackers. This is Erwin Cito bringing you the Truth About Real Estate Investing show. I trust you're all keeping well. And if you're not, and you're able to, that's okay. I worked on myself a lot since I was a frustrated new graduate, graduating immediately after the dot-com bubble burst and the events of 9/11. Like seriously, I was in fourth year university when 9/11 happened. I remember being in finance class and my friend telling me that a plane just flew into the Twin Towers. Anyways, so we've all been down. We've all been underpaid. My first job was paying me $35,000. I get paid a little bit more than that now. And yeah, we were all underpaid at one point, at one time or another, compared to our abilities. It wasn't until I read Robert Kiyosaki's Rich Dad Poor Dad that it lit a fire under my butt. If you feel you're being underpaid, then do something about it. Hence, I got into real estate investing, full send. For folks who don't know full send, that means 100% effort. Joining a real estate networking group and never missing a meeting. I'm still friends with many of the folks I met there at those meetings, and many of those relationships have been integral to my journey to being here, to a podcast with 12 listeners. So speaking of meetups, we will be hosting our next iWin Real Estate virtual meeting on Saturday morning of March 27th. Our keynote speaker is the leading expert in backyard apartments, Andy Tran of Suite Additions. A backyard apartment is something that I made up because I'm tired of the other names. Garden Suite, Nanny Suite, I don't know. All these other names that don't actually describe what I'm talking about. There's an apartment in the backyard. Either it's an addition or a standalone tiny home that's been built behind an existing house. For many of you, that would be the third and final apartment that you'll be adding to your property for a major value add. And that would be the topping off of your highest and best use of property. Assuming you're not going to do a fourth unit as like a second floor top up. For you duplex investors, you basement suite investors know what I'm talking about. Anyways, I think this is our final frontier for significant additional cash flow. Andy Tran has been researching the subject from many angles, including zoning, construction, and financing. So you don't want to miss this update. If you're receiving my emails, then you'll receive notice of event registration once it's available. If you're not on my email list, then that's just silly. Go to www.truthaboutrealestateinvesting.ca. As I'm typing and recording this, so in a non-real estate subject, GameStop. It is Wednesday night. GameStop is going through the roof again. That meme Wall Street bet stock. Anyways, for fun, I bought five shares weeks ago when it was coming down, and I just like to share that I'll be donating my profits and the investment to charity. I was actually thinking about donating the money to my own charity. My charity is quite efficient with its money, so if I'm not actually sure if that's considered kosher or not. Anyways, I have a lot of my stock hacking funds actually in real, quote unquote, real fundamental, having underlying value in stocks and options in Bitcoin related stocks and options. Hopefully my theory is correct about Bitcoin becoming the digital version of gold for savings and hedge to hedge against all the money printing that's going on by our governments. Whether you agree if Bitcoin is a hard asset or not, it doesn't matter as long as you're taking action out there. There's a difference between the rich and the poor is the rich have assets, the poor do not. The poor trade their labor, their time for money, versus the rich, they trade their time they trade their time and money for assets. And then the poor, which happens to be a lot of our tenants, they may never not be tenants and never be homeowners. So make the decision yourself which side you want to be on. Have hard assets, whatever hard assets you want. If it's real estate, if it's gold, if it's Bitcoin, just please be taking action out there. My opinions are my own, and this does not constitute advice at all. But to quote one of the smartest people on the planet, but he won't always be on the planet, I think, in Elon Musk. He tweeted out a few weeks ago, in hindsight, this was inevitable. In hindsight, this was inevitable. Oh, I think you know what I'm trying to say. One more time. Inevitable. There we go. I think I got it. Remember, I learned English as a second language. That's what Elon tweeted days before it became public record that his company, Tesla, had invested $1.5 billion into Bitcoin, or roughly 8% of their cash reserves. What actually gets missed in this story, and it doesn't get mentioned in the headlines, is that Tesla also bought some gold ETFs as well. So one thing's for certain, smart money does not want to hold cash for long term when our governments are creating new money out of thin air each day. Speaking of my favorite hedge against inflation, I would still say that's real estate, in case anyone doesn't know. I don't know many people who own more real estate than today's guest in Russell Westcott. He's been through a lot of economic cycles, and being an Edmonton, Alberta investor, Russell's an old good friend of mine, and it's always great to catch up on what he's up to and helping other people out. He's possibly the top real estate investor coach out there, and it helps that he's owned over 100 properties, co-authored the best-selling book, Joint Venture Secrets, and I have Russell on the show other than just he's a great guest to have. He has a lot of knowledge to share. But also I want to talk about Alberta investing, because we have differing opinions on the Alberta and economy and the outlook for oil. My outlook is bearish on the oil industry with the growing popularity of electric vehicles and carbon taxes. I don't see the demand for oil keeping up. Not with Ford and GM publicly planning to be all electric by 2035. But I'm not an expert in this area. I'm definitely not an expert on Alberta real estate. I've never even been to Edmonton. And I'm always keen on listening to other opinions different than my own. So without further ado, I give you Russell Westcott. Hi, Russell. What's keeping you busy these days?
Holy moly. What day is it today, Erwin?
I don't know. I think it's Thursday.
How
many videos you made this week?
Interesting note. I'm actually, my YouTube videos, I am now out till April, and we're recording this in January.
That's fantastic.
I'm now out for having them scheduled on every Thursday morning. And my podcast just launched this week, was episode 35, and I have 52 of them online scheduled until mid-April as well. So
fantastic.
Oh man, that was my Christmas holiday. Really was try to get ahead. I want to get ahead of the game on a lot of these things, because it is a lot of work to produce this content and to help inspire people and help people move forward with what's right for them. It's a lot of work to do that. And I just wanted to get ahead of myself so I can now pivot to doing a few other things in my other businesses that I need to, take care of, and some year ends and some reports and some statements. And you know what? I have some goals. I want to buy some bigger properties in the next little while here too. And, I was sitting there with my business partner, Jay, and I were having a conversation, and I just came up and I said, you know what? I'm tired of playing small. I'm tired of playing small in certain respects. It's time to really just step up in a few respects. Step up in my influence. Step up in my the content I'm putting out. Step up in the asset acquisitions that I'm doing. Just step up in all areas of my life. I was just getting tired of playing small. And you know what? I've got a firecracker under my butt this year, and we'll see where it goes. Because an interesting, Erwin. I think it was last year, in the same time we had a conversation that we were doing, and I think that audio got lost. Did it not?
We did lose one.
Well, interesting is, Erwin, you want to know something? I found it on a backup drive, because I keep a backup drive of anything I do too. So if you're ever interested, I can send it to you if you want to have it as a backup. So there is the lost interview, and it was pre-COVID. It was pre-COVID 2020. So it'd be interesting to see what we talked about back then.
Did my recording fail and you took over the recording?
No, I usually do a backup when we're doing these kind of things with people. I do a backup, so I have a really high quality one from my end that I can send to the person, the host. So you can just match your editor, Dave, if you're listening, or if he still does your editing. You can just match up two high quality audio recordings, and it sounds like we're in the same room, right? Yeah. So at that time, and I think you were the first person that I publicly announced to that I had a goal of inspiring 1 million people, 1 million people, to give them the tools and resources to help them buy one more property. Okay. And I gave myself 15 years. So 1 year has gone by. And to be honest, and I'm not going to make any excuses that there have been a few things that have happened this past year. I might be a little bit behind, but the first person I had to work on in order to be that a kind of person to attract 1 million people is I had to work on myself, right? How do I get out and scale and distribute a message via podcast? How do I get it out on YouTube a lot more? How do I do live broadcasting? How do I get my writing? How do I start building out my team a little bit more, no different than what I built out my team in my real estate? How do I build out my team in my personal brand to be able to impact 1 million people's lives over the next 14 years, right? So that's a lot of work. And wow, if somebody has ever done that, tip of the hat to somebody, because you don't realize how much effort and how much work and how much almost on a daily grind it is to get the posts right, to edit, to get the edits right, to have the right team, to interview people, to have different video editors, different audio editors, just different writing editors that just have a consistent schedule of content that just keeps going out. And I think I've got into a good groove right now of how I release things, right? So it's in, at the end of the day, it's about distribution. That's all it's about, is distributing a message to a wide audience to help people, to solve people's problems. And the more people's problems you solve, the better it is for personal business, but also the better it is for just helping people move along at the same time, right? And just let's use an example here. Out in Ontario, you were finding that some rental housing providers were getting squeezed from a couple ends, right? Landlord and tenant laws were getting tougher. So some people went to Airbnb. Airbnb is getting shut down. So cash flow is getting tighter. The margins are eroding a little bit on some things. Property values are going up, which is great if you own, but if you're buying and you're looking at some cash flow numbers and there's only $120 on a pro forma and you're spending $1 million to get $120 a month, like what's the point? So some people were just disillusioned a little bit. So you pivoted, you learned stock hacking, you learned other ways of creating cash flow for people, right? So you've solved a new problem that your audience was having, okay? No different than what I try to do every day, right? Is to solve a problem that the audience has. And that's typically, stop consuming things, start taking action from them, right? And what is the action you need to do, and what are the steps you need to take in order to build yourself out a portfolio of problems, right? And no disrespect to podcasts, the irony is totally not lost on me here that we're doing a podcast here. But one of the things I don't like about podcasts is, in some cases, they're too passive, and it's entertainment. And people sometimes don't need more entertainment. They need more implementable action steps. Like, for example, I have consultation. I'll share an example with this one fellow I had a consultation with. And this is multiple people I have the same conversation with. So one of the questions I asked them is, okay, what level of education do you have in real estate to find out where we want to enter the conversation? Okay, I've read this book, lots of this book, listen to this, subscribe to that, listen to this podcast, listen to that. Okay, awesome. Have you bought a property yet after doing all that? They go, no. I go, okay, if you've listened to this podcast and this podcast and this podcast for over a year, you've got what you need to take the action.
Yeah,
right?
I know more than I did when I started.
Right. But then here's the problem that has the people, when they're asking me the question, they're sitting there going, okay, what about student rentals? I'm like, okay, well, I give them my opinion. What about mobile home parks? Okay, I give them my opinion. What about multifamily investing? I give them my opinion. I said, well, time out. What was that podcast you listened to an awful lot? Oh yeah, Bigger Pockets. Oh, okay, I understand that. So when you actually go and look at Bigger Pockets, and they do a phenomenal job with their podcasts. I think they're like 800 deep. But one day it's talking about mindset. The next day it's talking about putting a REIT together. The next day it's talking about mobile home parks. The next day it's talking about this. There's not a lot of focus for where you are. So I grind the people down to, where are you in the process right now? Do you own your own home? No. Okay, awesome. You don't own your own home yet. Do you realize in Canada you have an option that you can maybe pull out money from your RSP, that you can actually use that money from your RSP to buy, as a first-time home buyer, you can buy your first home. You can buy a home with a suite, live in the basement, rent the upstairs. Okay. Oh, I didn't know that. I think you can tap up into $35,000 if you have that within your RSP, or if you have unused room in your RSP. you can actually, and I say, okay, where's your down payment going to come from? Typically, well, it might come from mom and dad. Did you know mom and dad could potentially make a contribution to your RSP? You could withdraw the RSP, the $35,000 from your RSP, and you can get up to a $350,000 house on that program with a 10% down payment. Live in the basement, rent the upstairs out, right? And I'm pretty close on some of the ones I priced out for people. They're into it and they're only living for like $300 of their out of pocket costs. And you say you do that for a year and then you move out and now your cash flow goes up to $700 a month, right? So for that gentleman that I had that conversation with, I said, stop listening to Bigger Pockets podcast. Okay, here's what you need to do is you need to find a good realtor. You need to find a good mortgage broker. You need to have conversations with mom and dad. You need to investigate the home buyer's plan, and you need to buy your first property, because all these other podcasts and everything else you're listening to is great. It's inspiring. It's fantastic, but it's entertainment. It's not helping you move forward. You actually have a 5-step plan. And then I would identify the 5-step plan. And I said, okay, and here's what I'm going to do for you. After you've talked to a realtor, and I refer them one. After you talk to a mortgage broker, and I refer them one. And after you investigate the home buyer's plan to see if you qualify, after you do those 3 things, here's my link again. And you can call me back again. But the first question I'm going to ask you is did you do the first 3 things I talked about? And the answer is either yes or no. And if the answer is no, my question will be to you is why not? What's stopping you? And our conversation will be done today. Okay. Until you've taken the first 3 steps, right? You have to, then we can have the next conversation about what's right from there. Okay. So, sorry if I'm getting passionate here, Erwin. It's almost every time I get a chance to have a conversation, I get all fired up and just want to keep sharing here. So
I'll think about the people who didn't take action the last 10, 20 years.
10, 20, how about 5 out in your area? Right?
Yeah. I think people are used to their own context. Like a friend of mine who was at my wedding party, he said, "Oh, like we figured it out. My kids will figure it out."
Yep.
And so I went back to him like, hang on. So your dad was a VP at Bell, and your mom stayed at home. You and your wife can afford a house because you both work and make 6-figure incomes, right? Now, what are your kids going to do?
Yeah, absolutely.
Will their households double their income from your income? Right?
Nope. No, yeah, absolutely. So,
and real estate's got a bit more than that too.
A little bit, right? No, don't get me wrong, guys. I'm not trying to be a jerk about things, but I'm just maybe I'm just getting old and getting a little impatient with people just not taking action. I think we have some of the greatest opportunities around us right now. And all it does is just, potentially stop consuming the materials, start using the materials. No different than books. Like there's always, it seems to be a badge of honor that people will post and say, I've read 52 books this year, a book a week. Well, first of all, congratulations. That's awesome. Reading the book is a great first step. You're further ahead than the person who did not read the book, but barely. If you did nothing from that book, what do you have to show for it? So what I actually do with people I do is I go, let's slow this down, guys. Let's take 1 book a month. And you're going to read it as many times. You're going to get the audiobook, you're going to get the paper book, and you're going to read it and listen to it as many times as you can in 1 month. But the goal is how many things can you implement from the book, not how many books you can read. It's how many ideas you put in action from the 12 books, not that you just read 52 books, right? So, and for if any of you guys are interested in some really good book referrals right now, I got 2 on my desk right now, 2 of my favorites. Power of Focus and Who Not How, right? So those are 2 books that one just came into my world just recently, Who Not How, and the other one, Power of Focus, has been in my world for, better part of 15 years. Read it every year. So
I could use some focus. I'm so distracted these days. But I've been through Who Not Now twice now on the audio version.
Oh, it's phenomenal. It's let's put it this way, and I think I recommended it to you and Cherry as well.
And
when I first read it. Absolutely. You took action, you got the book, and you started implementing it. Now, this book, I'm not trying to blow sunshine up Dan Sullivan's skirt here or whatever the saying is up his backside. It's a phenomenal book. It's one of those books that it lands for me in my personal success library, and now don't take this with any hyperbole, is it lands between Rich Dad, Poor Dad and Think and Grow Rich as books that have pivoted the way I thought of things, right? And most entrepreneurs, real estate professionals are entrepreneurs at the same time. Most of you entrepreneurs, and I'm looking at you, if you're on podcast, I'm picture me just staring in your eyes right now. Every one of you are lone wolves out there. Everybody is trying to do it themselves. Nobody can do it better than I can. And the reason why I'm looking at myself in my camera here is because I am looking at myself and I'm telling that to myself too, right? We all have things that we need to learn, right? And through some good coaching and through some good mentorship and some good things, is I'm starting to let go of a few things. But I'm doing it strategically. Strategically meaning I'm getting a standard of quality. I'm getting far enough ahead of some things with things. So if I brought somebody in to outsource it to, it's not in a mad rush. Is, oh, by the way, you got to publish something tomorrow. It's you've got 3 weeks. I'm going to test out 5 people. You've got 3 weeks to see what you can create. And out of that 5 people that I'm testing, probably 1 or 2 are going to surface that are going to be rock stars out of that, right? And 3 of them will probably just fall off to the wayside. But it gives me some time to try them out, to test them, to give them projects, to see if they can wow me with what they're doing. Because my expectation is, if this is what I can do myself, my expectation, if I'm hiring you, is you should be able to do this plus, right? So it's a long process of, long-winded way of saying is essentially what I'm trying to do is everything I've done within my real estate business to set it up that it can run without me. Everything from the acquisition side to the capital raising, to the mortgage financing, to the property management, to the closing, everything I've done on the real estate side to make it really turnkey. I'm now applying all those principles over to my personal brand, influencer side of my business and my consulting side. So just taking those exact same disciplines and applying it to another business.
So. Okay, before we move on to the personal branding stuff, this is a real estate show. What are you investing in these days?
What am I, real estate wise?
Real estate wise.
Well, number one, the best investment, and sorry if this sounds quite as a trite comment and a flippant comment, the first thing I'm really investing in is myself and my team. Is that's the first place that the investment goes, is to get the team in place, and to more importantly get me in a position that I can actually become that person to serve the team better. Okay, so that's the first. On a real estate side of things, I'm still investing in Edmonton, and quite honestly, I think the opportunities there have not been better. It's been, I haven't seen numbers like we're seeing right now in Alberta and in Edmonton for close to probably 15 years now. The rent to price ratios are really getting in alignment. The new construction properties are cash flowing even better. That the interest rates have gone down, and the cash flow on the properties are, on a suited house, you're getting anywhere between, if you have vacancies, or not, you're getting around $600 plus or more. And we're starting to look at some bigger projects, some bigger land developments, some bigger projects that we're starting to put our fingerprint on, because here's what we're seeing. Interesting to note, I don't want to make this about Edmonton or whatever, but this conversation with my business partner yesterday is we're starting to see international money flow into the Alberta and Edmonton real estate market again. And when I say international money, I'm not talking about somebody buying onesies and twosies. I'm talking about a group of investors buying 10 a month for probably a year, like for years at a time. And they're coming in all cash with that to just acquire as many assets as they can. You're also seeing a supply shortage happening in Edmonton, because over the past years, new houses have not been coming on as fast as the demand is going. So demand is high, supply is low. It is a perfect storm. The moons are starting to align for the market to start going up. And the beautiful thing is you're getting some really good cash flows right now too. And you can buy for cash flow from day one and ride it up. So, and another thing, I have lots of ideas here, but and I'm executing against them, is for the first time in a while, I'm starting to finally see the arbitrage opportunity in Edmonton, meaning what you can buy a property for unrenovated versus what it is would sell for renovated. There's finally a big enough gap that you can start making some money. And I'll just use an example, two examples. Probably about 3 years ago, if you would have bought a place in Edmonton unrenovated, and let's just use a townhouse, you could have bought it for, say, $110,000 unrenovated. Fully renovated, you would have maybe sold it for 155, but you would have had to put 30 grand into it. So you're into it for 140. And by the time all that, if there's, you're a hiccup away from losing your shirt and losing some money on that. Finally, and this just happened just this past year of a property that we did, you can pick up the same place for like 110, 115. That same place renovated is now selling in the 175 range or higher. So if you buy it for 110, put 30 in, you're into it for 140. If you sell it for 170, less some expenses, now you're at 160. There's potentially for a $20,000 margin there that you can make some money doing some fix and flips. And the really cool thing is, Erwin, interesting to note, those places that are selling now for 170, I bought those same places 12, 13 years ago for higher than that. And the rents now on that place are now at, I think the last one was almost $1,500 rent. So you're getting $1,400, $1,500 rent on $170,000 not brand new, top to bottom renovated property in Edmonton right now. So the numbers are starting to make sense again to get in a big way. But I like new construction. I like the new construction properties you purpose built, things like that. But if the budget to get into $500,000 doesn't work for you, in Edmonton, you can get into a $170,000 place that's top to bottom done, and you get a really good tenant profile too.
Yeah, I don't know where you get that price point in Ontario.
Isn't that the renovation cost? It's almost the renovation cost to put a suite into a place.
Yeah,
interesting. Erwin, I'll just share a conversation I had with a person. They were looking at a place out in BC, which is where I live, and they were looking at a place, and they thought it was a great deal at $350,000. Okay, I go, okay, well, $350,000, great. What kind of rent you get for it? And they go, well, probably about 16 to 18. I go, that's not too bad. I go, let me share that exact same property I just shared with you. You could actually buy 2 of those townhomes fully renovated for $2,800 rent for the exact same price point. Mm-hmm. So you're getting an extra $1,000 in rent over here. And oh, by the way, that $350,000 place you're buying, your land transfer tax would be you're paying probably about $6,000 or $7,000 in land transfer taxes. And you have rent controls, and your increase you can only do is only this so much this year. So why not move over here, pivot over here, get a manager to do it, buy 2 of these places for the same $350,000, get an extra $1,000 in rent, right? And save yourself like $7,000 in land transfer taxes to boot. Mm-hmm, mm-hmm. So Russell, it's fun. I have lots of fun when I'm doing it.
I'm sure you have lots of fun with ignorant Ontarians like me. What's going on economic-wise in Alberta?
What's going on there? Well, what's going on there? It's interesting to note is it's still a little bit of a roller coaster. If you actually follow, it's funny. One of my clients and I, we were just kind of talking about it, is the perception is not the reality, if you really think about it. If I had a conversation with somebody in Ontario about what's going on in Alberta, most people, here's the real story. So, or a story. I was on one of your webinars. It was on a Saturday iWin event. And during the break, everybody was all quiet and everybody was shy. So I jumped in, I grabbed the microphone and I said, guys, how's everybody doing? What are you guys buying? What are you doing? Tell me what you're doing. Let's talk some shop. So people were sharing me their numbers and sharing that. And someone was sharing that they're buying a house, suiting it, and they're into it for like $800,000-$900,000. And I said, geez, Louise, for that same price point, I can get you a brand new 4-plex with 4 rental units that would generate probably about $6,000 in rent. Right? And they're going, oh, wow, that's fantastic. Their eyes lit up and they're just going, wow, that's great. Where is it? And I said, it's in Edmonton. And they're, oh, really? It was like they were disappointed that it was in Edmonton. I said, okay, let's time out. Why Edmonton? They said, well, everybody's not working there, and a bunch of rednecks, and oil's dying, and they're going all this and there. I go, okay, so let's look at this. Let's look at the facts. Did you know that Alberta and Edmonton had the second highest in-migration numbers over the past 12 months? You know who was number one? Prince Edward Island, right? So Alberta was the number two in migration. Did you know Albertans make the highest wages on hourly wages in anywhere in Canada? Did you know that? Did you know that Albertans are actually one of the youngest populations in Canada, and a young population is really good, which will state the health for a growing economy and growing housing market. Did you know that there is, something like $4.8 billion of projects that are still slated on the books that are still coming into a population of 1 million people? Did you know that in Edmonton, it's the 5th largest city in the country? You don't have to go out to a little tiny little North Bay and a little tiny little, backwoods town and Timmins, and you don't have to go to these backwoods town to find cash flow. You can find cash flow in a place that has like 1.3 million people. And did you know you can buy a brand new asset that somebody else looks after for you, that you don't even have to look at potentially? You don't even have to go see it. And you can pick it up and you can cash a $600 to $1,000 check each month on a brand new asset that has very low maintenance, very low pain in the butt factor, and it's just turnkey for you. So that was my quick way of doing a 45-minute keynote presentation. But I think the perception is not the reality of what's going on, really.
Can you educate the ignorant Ontarian and myself?
No, I wouldn't say that. I would just say that you're probably just not educated enough yet. You're not ignorant. You just need to look a little further over the border, right? And then people then say, well, what about oil? What about all that? And I say, yeah, absolutely. Oil and gas is a primary driver, but let's use this as an example. For number one.
I had to have this conversation all the time with people about Hamilton. It's like, steel's over. Yeah. Well, actually, no. The basket was just humming.
Yeah. Well, let's think about it for one standpoint. It's actually, let's think energy as opposed to just oil and gas, because that's really what it is. And in Edmonton, they're actually, and some of the companies are on the forefront of leading in renewable energy research. There's large research that they're doing on these things. Now, let's take a look at this. Erwin, I'm looking at your office there behind you. In the background, you got that printer. You've got that desk that has, I would probably think, some laminate on it. You have all those cables over there. You have your running shoes, and I would say 90% of the things in your office that I'm looking at probably derived from some way, shape, or form from a oil and gas or petrochemical or some kind of a thing. They're not. It's not made out of soybeans, if you will. Okay. We still need energy. We still need to, we still need to be able to heat our homes. We still need to be able to put gas in our cars. We still need to be able to have some consumer-based products. I don't think it's going anywhere soon. And what is going to maybe pivot is maybe the fuel side of oil and gas maybe start dropping, but the refining side and the petrochemical side and the manufacturing side will start growing. And then also there's a whole burgeoning clean energy renewables technology that's coming out of those companies at the same time. Right. So I think it bodes very well for a long-term future. It isn't just a one-trick pony. It's actually interesting. I may get this wrong, but I think it was it Forbes or Price? It wasn't PricewaterhouseCoopers. One of those research firms that said that Edmonton, Alberta, is the most diverse economy in Canada for employment and working. Now, I could pull it up. I think it's behind one of those ones, is one of those payment walls where you have to pay like $1,000 for a research report. But it did state that it was the most diverse economy of the major urban centers in Canada. So once again, perception's not reality.
Well, that's why you're on the show rather than having an ignorant Canadian Ontarian talk about it.
Well, but at the same time, Erwin, I cannot look at an Ontarian in the eye and say that I was right over the last decade to say that I wouldn't have been better to buy a property in Ontario. over the last decade, or even in British Columbia. I can't look at my wife in the eye and say, when she asks me questions, well, Russ, will we have done better if we would have bought another place in BC over the last 10 years? And I cannot look her in the eye and say, yeah, we wouldn't be better if we did, because that's not the truth. Is the last decade, the last 12 years in Alberta has been extremely challenging. It has been a very wild ride, and the market at best has been flat, at best, but even probably even a decline over that period of time. But what I do know is no market. Now I'm going to show my arms here, and if you watch the YouTube video, you get the gist of it. If you're listening to it, I'll try my best. A market that has been flat for 12 years has a greater chance of going up than a market that's been going up and doubling for the last 15 to 20 years, in my humble opinion. Okay. No market can stay down forever, and no market can go up forever. So just pay attention, buy on some good fundamentals. And most importantly, if the market is not providing you good cash flow, the cash flow is the wild card. If you can buy a property that cash flows, it affords you the luxury of waiting for a market to come. Okay. And when you want to be buying your assets is when it's at the bottom, not when you just had a record housing price last week in your marketplace and you're going to set a new record next week. Like, don't get me wrong. If you own an asset, do the happy dance, right? High five. We're geniuses and stuff like that. But just be very mindful about if you are acquiring more at a peak of a marketplace, because I have been in markets that had 53% growth, followed by 27% growth, followed by 18% growth year over year over year. Sometimes those don't end that well, to be honest. So just be very mindful of when you're buying your properties. And I know there's a cute saying out there is don't time the market, it's time in the market. I 100% agree with that. However, if you can do both, you'll actually do extremely better. If you can both time the market and be time in the market, you'll have a much better ride in this game of real estate. And here's an example. An investor in, let's say, Alberta, who bought in 2007, 2008, as the market was going up 53% and just kept going and going and going and going and going, right? It's turned down. The peak house price in Edmonton was, I think it was August 2008. It has not reached that point yet since 2008. So what is that, 13 years now? 12, 13 years? Okay, that same investor who bought in 2007, just before the peak, if that same investor would have bought 5 years sooner, or 3 years sooner, or even 2 years sooner than that peak, would be sitting there going, yeah, I have lots of equity in my property. It's okay. It's cash flow and I'll just hang on to it. It wasn't worth what it was in 2008, but I bought it for significantly less. So I'm okay to hang on to it, versus that person that bought it at the peak and they're just going, I can't sell it for what I bought it for. And the mortgage balance is probably equal to what I pay, is equal to what the value is today. I've got a handcuff because I can't sell it to at least pay off my mortgage, not let alone get my capital back, right? But I think that has shifted now, that if you're acquiring now, you are acquiring on the bottom, on the ride up. And I'm starting to see the numbers shape up no different than I saw it happening in 2001, 2002, 2003, where the numbers were starting to shape up like that they were back then.
Are you seeing that the same thing on the tenant demand side? Are showings busy? The rentals, the vacancies fill quickly?
I have 0 vacancies in my portfolio right now, and as a matter of fact, the rents have finally gone up for the first time in a while. They've gone up, and more importantly, is they're filling fast. They fill very quickly. I'm surprised. I thought it would have been worse, but here's what's happening: is some people are pivoting. I have a lot of people that are in the market to buy a new home, to get a new home, and their homes have been delayed in the building. Okay. So they're renting for 9 months, year and a half while they're waiting for their home to be built. Okay. Or some people have just taken a step back from owning a home and they become renters, and they don't want the commitment of the home for that. And I think the tenant pool in the areas that I'm investing in is stronger than it's ever been for getting some good quality tenants. If you provide a good quality property for them to live in. You know, there's an awful lot of garbage on the marketplace, and I say that by looking at myself too, because I have some properties I would consider garbage that are just not worth it to put the money in to renovate it. I'm just to try to, you know, it's a struggle each month to try to get somebody in, you know, to pay $1,000 because I don't want to spend the, you know, the $20,000 to renovate it because I won't get the money out of it. I just need to keep it going and hopefully the market will catch up. Okay. That's on one side of my portfolio. On my brand new portfolio, the new houses, the purpose-built construction that I'm doing, the tenant profile is amazing. Like they're coming in and they're going, yeah, this tenant profile, when you just factor in this income and this income, you know, they're making 12,000 a month and this, that, they have a good job. It's been all verified. It's just like, wow, that's awesome. Right. Versus my old properties. It's like, well, if we take this allowance and we take this money that they get from here, we can maybe squeeze them into the ratios that make sense, right? It's just a different tenant profile.
Much better than what I thought was going on.
No, it's like I said, that's the title, the working title of that presentation is Perception is Not Reality. And I think I just have confirmation that I need to host a webinar on that exact topic. And dust off a presentation I did 3 years ago and get some new numbers on there and just, you know, maybe guys, if you're interested, if you're listening to this podcast or whatever, if you guys are ever interested, maybe want to hear a YouTube video or a presentation on the, you know, what's going on in that marketplace, by all means, hit me up, leave a review or leave some feedback. And I'll take the time and put together a really killer training program and a little an information session for everybody. And the main thing is, you know, don't make any mistake. My goal, remember, to a conversation before, is attach the education to the opportunity, attach the education to the action, and don't be surprised if I really, you know, after doing that, and you see that there's an incredible opportunity ahead of you, that you need to execute on it, right? You know, being presented some amazing information and just not doing anything with it, you might as well not have been presented it to in the first place, right? So no different than would you share, Erwin, in your Stock Hacker Academy and all your Facebook groups. You share what you're doing with people, right? You literally go, here's my trades that I made today, right? And here's, you know, I don't know if I shouldn't be saying that, should I? That's legal, is it not?
That's the weird thing about financial instruments is you can't talk about it publicly. So I'd love to be able to share what I'm doing.
Yeah.
But I'm fearing being punished financially, securities wise, whatever. So I'm much more real in our private group. So
right. So it's okay for somebody to sell a newsletter and tell what they're sharing as their trades, but they can't publicly tell it to the wide open audience.
It has to be properly disclaimered.
Okay.
And I'm just not patient enough to do all that, especially on like an Instagram story, for example.
Yeah, I could get it. So here's the Instagram story. Is the first one is here's the trade, here's the money, and then four title cards after of the disclaimer, right?
Yeah, exactly. my lawyer texted me after he saw a story I posted on something I did with BlackBerry. And it's like, but I already did it. It's over.
Yeah,
BlackBerry. No one can
mistake
this. Yeah.
Is that still a thing?
So, just a quick side note on this, folks. This is for education, not advice. Please, we're not professionals at all. This is already history.
We barely even qualify as amateurs.
Yeah, exactly. So it's just simple. Like one of my friends owns a very successful IT business. And so I asked him, what's your favorite antivirus? And he said, BlackBerry. Like, I had no idea. Right. So this is someone who actually uses it. No, same reason why I asked you about Edmonton. I'm not going to try to find answers on investing in Edmonton, Googling or YouTubing. Just go straight to you. So my friend has a very successful IT business. And in his opinion, probably a qualified opinion, he said one of the biggest things of 2021 will be antivirus software, because there's just so many problems, because people are working from home, using personal machines, right? People are generally bad with their password management. So, you know, I think we've all seen like the Facebook viruses that come through and stuff and whatever. Anyways, so he said that, I'm like, okay. So then I checked out BlackBerry and I was like, I like this. I did the trade, made a quick $200. So I bought myself a pair of Nikes. A pair of
Are
shoes I've
those
been
those
holding
ones
off.
in the? Are there the ones in the background there? The black
No,
high
not those
tops with the
ones.
red soles? Huh?
Mine are on order right now. I ordered customs, so it won't be here for 3
Oh,
months.
well, excuse me, hoity-toity, Mister Zeta. I got customs coming.
You know, that money is just the money I made minutes. It took me
Yep.
minutes to make that money, right? So I don't like to spend my own money that I worked for. I like to spend invested money.
Yeah. Well, the term used to be playing with house money before was the money you made off the real estates. What do
Yeah.
you call the money you make off the stocks now? As you're playing with what?
It's still house
What
money.
is it still the
Because
house money? Very
the
nice.
stock money was all funded from real estate.
Yeah.
For either dispositions or home equity lines.
Yeah.
Right?
Well, it's
And
awesome.
yeah, all the top
No,
stock
like I said,
hackers are
Erwin.
real estate investors.
Well, like I said, Erwin, at the very beginning, before we even started, I gave you some props on how well you're doing in your community, the job you're doing of changing people's lives. That's, it's the most fulfilling, purposeful work you can do, but it's hard work at the same
Oh, yeah,
time
it's
because you
hard.
sit. It's hard, but then you also sit there, and here's the conundrum. And have had this conversation. Sometimes I sit there within myself and I go, if I took all the time that I've done to put together the videos and the training and the podcast, and I took all that time that I did to inspire others, if I actually took all that time and just focused 100% on more acquisitions and more properties and more purchases and more things that would serve me, I usually end that conversation at that at that part because it really does come down to you really have to love what you're doing if you want to serve at a higher level, right? You really have to love because it is about the passion. It is about the calling and the purpose. And I think most people, maybe your audience is an exception. Most people, the biggest crisis that we have, I believe, in society is a crisis of purpose. Is that not enough people are walking around with a strong enough reason why and a purpose of what they want to do and something that they're contributing to that's greater than themselves and serving others. There's an awful lot. First of all, people don't even have an idea of what they're thinking about or know what they're doing. And then a lot of those ones that maybe get to one level, they're just thinking about themselves, about how they can do. There's a very select few people like yourself and your lovely wife, Cherry, who want to give back and serve at a higher level to help solve that crisis of purpose that we are facing.
Yeah, that's what I always say about. So when people ask me about Russell, I'm like, "Oh, I need a real estate coach." And like, you better get on Russell because I don't know how long he's going to do this for. Because most coaches have an expiry life. They don't want to do it forever.
I truly love it. I really do love it. But at the end of the day, it's a lot of time. It's a big commitment. Mm-hmm. It's a big commitment for the student, but it's also a big commitment for the coach at the same time too. Is like, I wear some of these things when some of my clients, when they're struggling with some things and they're having trouble busting through, or they need to make a really important decision that's going to impact, whether to leave a job or, take this step or that step. I maybe I'm a little bit too empathetic, or maybe I feel too much, and maybe I just need to be the hard ass coach. But I take it on and I feel it and I understand where they're going through, and I help them walk them through the process to make some of these really big transformational decisions. And the reward is at the end when you see people on just how they turn out and the transformation they make is, not to toot my own horn, but I've had a pretty good success rate over the last 3 years of getting some pretty cool transformations in people. And I don't know if I'll ever give that up, but it might take a back seat a little bit more in the future, right?
So the price might go
up. Something I wrestle with all the time. And that's, that comes down to our own limitations we have within ourselves, right? Sometimes we feel that we can't charge that price, right? And then some people have no problem charging $75,000 a year for coaching, right? Or whatever the number is, right? So I think it all just comes down to is, do you care? Do you have the best interest and heart of the people that you're working with? And you just put in the reps to do the work to deliver the end result. And the result is great. Like, don't get me wrong. I love the result, and we're really dogmatic and we're really aggressive to achieving a result. But the most important thing to me is at the end of that time frame that we set out, is who did you become as a person in the process to accomplishing that result? Because if I did my job as a coach, I've helped you develop your skill set that you can accomplish any goal, not just the one goal that we're working on. And who did you become in the process to do that? And not only that, taking a page out of Who Not How, who did you help along the way, and who did you bring on in your business to help you take the next step so you can impact others? And that really is the gauge of how the coaching works, is if you come at the end that you like who you are, that you have an amazing skill set that you can accomplish any goal, and that you now have a contribution goal that you are going to inspire and help others, we now know it's time to transition and probably a graduation party is in order for our coaching. That's my end goal with most people. And I usually know it's time to graduate with within the coaching is usually my students and I will collaborate on some kind of a project at the end, whether it's some kind of a webinar or some training or education, or maybe even a project where I invest in theirs or they invest in mine. We're usually now become collaborators as opposed to coach and mentee. And then I know truly it's time to graduate, because the role of a good coach is to get the people they coach to be better than the coach. And that's what I have with all my coaches. Now, I've accomplished an awful lot in my life, but my goal with every person that I coach is that they make my accomplishments seem small and pale, and they go, "Holy moly, you were coached by that guy? Wow, man, he hasn't done nothing compared to what you've done." And that's actually that's actually music to my ears. That's actually, as a good coach, it's all about the result of the client and not just your result, right? That's why I do not typically go online and share all the coaching. People don't even know who some of my coaching clients are, right? And you'll be surprised that when you do find and you have a conversation, Russell coached me. You go, "Oh, really? Well, yeah, I noticed the difference," right? So I digress. So,
and from the outside looking in, like you and I have had this conversation. I've told people as well, especially when people ask me to coach. I personally don't have the wrong personality to coach. I've known that about myself for a long time. But you can ask my team as well. What people don't understand is that coaching it's largely trading time for money. And most highly successful entrepreneurs and real estate investors, that's not what they do. That's not how they make all their money.
yeah.
Right. That's like you were saying, like, if you'd invested all the effort that you put into people into your own portfolio. Yeah.
Yeah, I would. One of my last interviews I did with one of my good friends, Dave Steele. Have you and Dave connected? Has Dave been on your podcast yet?
No.
I think they're at
it was right in the middle of pandemic, and it was not a good time. Right, early pandemic, like the spring.
It was funny. He told a really funny story. So the long-winded story of this is, I think they own $2.3 billion in portfolio. I think they bought like 17,000 properties in the last 5 years. But anyways, Dave was telling the story is when he was talking to an investor, he said, "Yeah, we have $1.8 billion in real estate." And his business partner came up and says, "Dave, it's now 2.3." And he goes, "Oh, I guess I misplaced $500 million of property someplace." Right? So the point I was trying to make is, I'm not saying I would get to that level if I took all that time and energy, but I think it would probably be a lot bigger than it is now, to be honest. So guys, if you are interested, catch me while you can, is I guess a way of saying is, I do have capacity right now, as I do work with a select few people, and I do have some capacity. If anybody is interested in wanting to get some coaching, I can see if it's a fit. If it's not a fit, I'm brutally honest and tell you this just doesn't work for you. As a matter of fact, some people think they need coaching where they don't. They just need a little guidance and a little direction. And I'll be brutally honest and tell somebody, I'll sit there and I go, where you're at in the process, I could be a coach and I can help you, really, but it would be like applying a bazooka where you just need a fly swatter right now, right? But if you really need some horsepower to really ramp up, and you're really frustrated and you're really stuck with where you want, and you need a bazooka, I can help you out, right? Sorry for the graphic war references or stuff like that, but I think you get the point.
And where can people follow up then?
The best place would be just russellwestcott.com. Everything revolves around there. I put out 5 blog posts a week. I usually write something every day. I put out something social media 5 times a week, a video once a week, podcast episode once a week. Do you mind if I have a quick plug for one thing, Erwin, if people are listening? Actually, I'm just in the process right now. First video just went up, and I'm putting out a free 5-part video series on my YouTube channel. And this video series, it starts off with building you a plan of how do you build a $1.8 billion portfolio with $93,000 a year in income. So I build you a plan. Then the second step is what will stop you? How do you get the mindset? And then after that, I share with you the biggest obstacles you will encounter. How do you bust through all the biggest obstacles? And it's a 5-part video series, and it's 100% free. And I think it will turn a lot of people's light bulbs on to looking at real estate completely different after they go through that. So if any of your listeners are interested in that, if you just go to my YouTube channel, subscribe, and there will be a playlist there. I think by the time we're recording, I just have the first one on there. It'll be within the next month. All 5 will be there.
I just hit subscribe.
Oh, well, thank you.
YouTube.com/Russell Westcott.
Yeah.
Wow, you got a vanity URL already.
I think it takes 100. It only takes 100 subscribers to get that. I'm almost hitting 1,000. I actually shocked myself when I looked on the other day. I've had 700 and some subscribers right now. I go, geez, I didn't even know. I hadn't even been looking at that number for a long period of time, and just been trying to get more efficient in the content production. And I know off the air, or when we had the wonderful conversation. Like, for example, yesterday, I had a conversation with my business partner, with Jason. And I have a software package that I use that does live broadcasting, that I can do scenes. Like, I can cut back and forth to him, to me, to double shots, to have graphics, to have a whole bunch of, I have set up 7 scenes that are all done there. And just with a push of a button, I can do that as we're talking. Okay. And I structured the conversation that it would be, we talked about 4 teaching moments in it. It's set up as a whole long form podcast and YouTube video, but it also had 4 teaching moments that I can clip each of those 4 sections out. I actually got 5 YouTube videos out of it, 1 long form podcast, and it all had all the edits and had all the cuts and had all the splices done in real time, and there's no editing. So all I have to do is just chop, cut, intro, outro, done. I can get a video up. Honest to goodness, I could get a podcast up and done after editing. After recording, a podcast could be online in under an hour.
Man, that's way faster than me. Are your coaching students doing any of this personal branding stuff?
Some of them, right? It all depends on where they're at, right?
Like
Rebecca? There's this wonderful, Rebecca's just crushing it. She's just wait to see her YouTube channel when she gets going on her. She just got a really good resource that she just hired, and it's going to take her YouTube channel up to the next level. And I think she's well poised to become a YouTube real estate influencer, like well poised. Like, she has all the building blocks to really do that. And if you're listening, Rebecca, man, I can't wait to see you cross that 100,000 plus subscribers and then some. So. Amazing. So yeah, there's just lots of things, and it's just all about getting those efficiencies. It's all about building the team. It's all about just trying to serve more people the most efficient way possible. And it's distribution is my number one buzzword, is distribution and team, right? I guess that's 2 buzzwords.
Yeah, we'll need to talk about that, because I need to build up mine on this part of my business.
You have to first want it, right? It's one of those ones is, I sat there when I wrote that goal of 1 million people. The first thing I said is, okay, who do I need to become in order to be a person to attract 1 million people? And I was nowhere near that person. It's like the old exercise where you sit there, you write down who has 1 million subscribers, or who has 1 million. Then you write out all the things they do. Here's what they are, and here's what they do. Here's how charismatic. There's how they do this. You write all those things out, and then you take that piece of paper and you flip around and you say, now this is all the things I need to become. Right? You just wrote out all those characteristics and things that person are doing. Then you have to embody that in order to become that, if that's what you want to do. And don't get me wrong, some of my clients, interesting to note, I actually just uploaded a podcast episode, and I think it's episode 48 to 51 in a 4-part series. was one of the people I interviewed with, and the lead to it was, introverts rejoice. You don't, if the thought of you going out and shooting a video and putting a YouTube video on and putting out a podcast, or the thought of you doing all these things to go on social media and go, look at me, if the thought of that makes you hurl, listen to this upcoming episode, because I interviewed a guy who literally does not even have an email address. And he has a sizable portfolio, and with a handful of, I think, 7 people through business relationships, through his family, he's built a very sizable real estate portfolio. And some of the property he's never seen, some that he barely is ever home. He literally lives wherever he wants to, and you cannot get a hold of the guy ever. So you don't need to be the person on social media every single day going, look at me. There are other ways of doing it. And that was the podcast. So if you are subscribing to the podcast, they'll be coming out probably within a month or so.
Amazing. Awesome.
Yeah.
Any final words you want to leave for the listener, Russell?
Pardon me, brother?
Any final words you want to share? I find I ask a lot of questions. Not so much this episode. I don't always want to be steering the conversation.
Yep.
But actually, I'll bring something up. The listener gets it, because I think most of our listeners can take away something that from one of my shows in the past, from one of your shows. I was talking to my neighbor the other day, because I'm selling my house right now. She's asking me, like, we were talking about real estate, and I mentioned I bought my daughter a house. That's her RESP. I bought it it's worth about 3 times now what I paid for it. Right? She's like, "Holy heck!" Like, well, what are you doing for your kids? Like, we're about the same age. Like, her and I are about the same age, and like, she hasn't really, she probably has an RESP, but I'm pretty sure my daughter's is doing a little bit better. But this opportunity was available to everyone, and there's still all these people we haven't reached with our influence, with our knowledge sharing.
Yeah, and we sit there and we look at is even as much as we are, quote unquote, shouting from the mountaintops, not everybody is listening. Yeah. Right. And it just comes down to just putting in the reps, putting in the miles. And when you don't think anybody's listening, and your mom is the only person commenting on your social media posts, which from time to time, that is the only person commenting on my posts, is, sometimes you just need to just ground back into just putting in the work, trust the process, just putting down good inspirational encouragement, just being a positive person that just keeps putting good out into the world. Right. And to answer your question, I'm going to leave you with a story that I just recently heard. And this one, it was probably, I was listening to a podcast that I heard originally, and then I researched about it, and then I actually just wrote about it. I blogged about it. And the question is, do you want to be a carrot, an egg, or a coffee bean? Have you heard this? No. Have you heard this story? You want to be a carrot, an egg, or a coffee bean? Okay. So here's how the story goes. There was this young lady who was sitting there with her mom in the kitchen, and they were just having a conversation, and the daughter was sitting there to mom and going, I'm just struggling. I'm having a hard time going on. Things are challenging at work. My relationships everything feels like it's just falling apart. I'm having a hard time. It feels like the temperature is just getting turned up around me. And then the mother looked at the daughter and says, "Oh, come on over here. Let's do something." She took 3 pots of water and put 3 pots on the stove. Okay. Each of them brought them up to a boil. In pot number 1, she put some carrots in. Okay. In pot number 2, she put some eggs in. In pot number 3, she put some ground coffee beans into them. Okay. And then after they came to a water boil, after about 10 minutes of the boil, they took them off, strained the carrots, took the eggs out, and then had the liquid in the last pot. And the mother looked at the daughter and says, "Feel them. Like, go tell me what do you see?" She goes, "Well, I see carrots, eggs, and coffee. What's going on here, Mom? That was a big mess. I got to clean up this big giant mess." Yeah, it's breakfast, right? Not many people have carrots. She goes, "Okay, well, come over here. Take a look at the carrots. Feel them." So she feels them. She goes, "Yeah, they're mushy." So you're telling me that the carrots went into the boiling water hard and resolved, and they came out mushy? Yeah, absolutely. Okay, well, talk to me about the eggs. Well, it's hard now. They're hard. So you're telling me the eggs went into the boiling water fragile, and the shell could break, and it was fragile, and they came out hard and bitter, they're hardened after. And she goes, yeah, absolutely. Okay, well, tell me about the last one. Here, poured herself a cup of coffee and handed it to her. Well, how does that make you feel in the morning? Oh, coffee. Heaven. It's just so desirable because I just love my cup of coffee in the morning. So here's the story is all three of those things went into the exact same situation. They all went into boiling water. One came out soft and mushy, one came out hardened, and the other, the coffee bean, changed the environment it was in. So guys, here's the question I'm going to leave you with. Do you want to be a carrot, an egg, or a coffee bean? We are all going through the exact same situations that we're going through right now, whether it's pandemics, elections, shutdowns, whatever you're going through. You can choose to be the coffee bean, and you can choose to change the environment that you're around, and everybody will enjoy the environment that you've created with a delicious cup of coffee. That's the last story I'm going to leave it with. Yeah, I'm surprised you never heard of that, Erwin.
No, I haven't heard of that one.
Yeah.
It's funny because like I need a coffee. I didn't have a coffee this morning.
So stick with me, guys. I got lots of these things.
Russell, one last time.
Yeah,
where can folks follow up with you?
Yeah, before we get to it, Erwin, it's been too long, and it's kind of silly. Not silly. It's funny, and we were joking about this off air. The only time we get to have these conversations is when we record a podcast. So we need to do this more often, I think. So
yeah, and in person. Oh man.
Yes.
All these people like, oh, vaccine, blah blah blah. Like, oh, whatever side you are, vaccine. Like, jab me because I want to travel. And when I do my boys trip in Vegas, anything I do to myself there will be worse than what the vaccine could possibly do to me.
Yeah. I think the vaccine, more than anything, and we're not going to get political here at the end, but I think more than anything, it's really a hope symbol for a lot of people. Like people may whether it works or not, I don't know. I haven't done the research, but I have a feeling that people, once they get it, will go, oh yeah, everything's to be back to normal again. I feel hopeful, and hope is never a bad thing. Right. There's a famous line in Rogue One, right? The Rogue One where the hero goes, you know what? Sometimes all you have is hope, and rebellions are built on hope. And I have my little baby Yoda over here, as you can see. So I have all these things there. So just sometimes just hanging on to hope is, when that's all you got, is a good thing too, right? And I'm going to answer your question, is just russellwestcott.com is the place where that's the central hub for everything that I've got going on.
Yeah. I'll just add to that though. When you're making money during a pandemic, it doesn't feel nearly as bad as what other people are going through.
Yeah, like the old saying is, when people are telling you, "Well, we're all in this together. We're all in the same boat." Well, no, we're not all in the same boat, right? But we all are on the same team. Yeah. Right. For example, and we're recording this shortly after, the U.S. presidential elections and the transfer of power, and whatever side of the fence you're on, whatever you believe, it's irrelevant, guys. It's happened. Joe Biden's the new leader. And for any of you who are out there that are going, yeah, I hope he fails, and not my president or whatever, I really do respect your opinion. I really do. But here's the thing. That would be like you going on an airplane, and you're going up to the captain and you're telling the captain, you don't like the captain, I sure hope you fail, of the captain of the airplane. Right? It is what it is, guys. And at the end of the day, no prime minister, no president, no premier, no mayor, nobody is going to determine what you do in life. Nobody is going to determine the actions that you take. Nobody is going to determine what you put in this year and this year. Nobody else is going to do that. You are 100% control of who you become and the purpose that you have on this planet. So sorry to end on a kumbaya, bang the drum moment here first.
You can choose to be. You can choose if you want to be the
absolutely. It is choose wisely. Yeah. You can choose to be the coffee bean that in every environment you're put in, you change the environment.
Mm-hmm. All right, Russell.
I'm
book
on
me
again.
Yeah. we got to talk about this personal brand and stuff.
Yeah. No.
You have my link. You have my secret link.
Anytime,
awesome.
My brother.
Thanks, Russell.
Anytime.
Have a great day. Thanks for doing this. Good seeing you again, friend.
Thanks, guys.
Hopefully see you in the real world soon.